Karen Galdelli from the Adaptive Human podcast. Welcome to the newest episode. Today I have Michael Frascarelli, who is here with me. Michael has 13 years of experience working in the investment industry. He graduated from McGill with a bachelor's in finance, and he is a CFA chart holder. CFA stands for Chartered Financial Analyst. The CFA charter is given to candidates who pass 3 exams on investment analysis and have at least 4 years experience working in the investment industry. Michael has done his own investing for the past 6 years and has advised others on their portfolios. Welcome, Michael.
Thank you. Thank you for having me.
So I'm so glad that we were put in contact. I love how social media works. I posted on Facebook that I was looking for people to be on here to talk about investing. And Diana, who I haven't seen in years, suggested you.
Yeah, we'd have to reconnect sometime with Diana. Yeah, Diana knows she's my girlfriend, and she knows I've been wanting to do this sort of thing. And I like advising people and helping people educate people on their investments. So she thought that was a great opportunity. So that's why she reached out to you. Yeah.
Awesome. And I'm happy, and I need to see her again. I haven't seen her, I think, since college. I'd like to say that's a couple of years ago, but that'd be a lie.
We'll definitely have to set something up.
So Michael, the reason I wanted you here is because I've been hearing a lot of, I won't say complaining, but dissatisfaction from some business owners and some professionals who I coach that are just starting out in the world. And they keep telling me, you know, I reach out to financial advisors, to investment advisors, because we want to start off on the right foot. But then they keep telling us, oh, if you don't have at least 100,000, 200,000 ready to invest, then we can't deal with you. We can't help you. We can't work with you. Right. Then on the other hand, you know, I was speaking to a friend of mine who's also in the investment business. And I said, oh, I've been saving up to buy a house. And he said, well, how much do you have? And I said, well, a little over 20,000 so far. And he goes, oh, hopefully it's not in your bank account. You should be investing that. And I said, but I don't understand. You know, some people say that it's not worth it if you don't have hundreds of thousands. And then other people tell you, you know, to start investing the minute you have 500, you know? And so I thought it would be nice to have somebody on the podcast.
Yeah, I'm definitely in the latter group. You know, keeping of having that $500 invested, because just keeping it in cash, you're not making anything, and you're actually losing money with inflation and the prices of food going up and everything. So definitely getting that money invested into the stock market is the way to go. And I don't know, whoever said 100 to 200,000, it might be that they are in like a managed account sort of group where they only deal with high net worth individuals. But there are definitely ways for people like you and I to start investing with as little as $500. I was just looking at a bank earlier where you can invest in their stock market funds for as little as $500. Oh, wow. Some are even lower at $100. There's online brokerage firms where you can start with $1,000. And if you're part of a company, if you're working for a company as an employee, you have group plans, where I started at a group plan and I started investing in my TFSA with my first contribution was like $200. So you can definitely do it with less than 100 or 20,000. I would say it's beneficial to do so, because the returns you get, like, let's say, I don't know, depending on what you invest in, you can get 10, 15, 20% returns in a year. Nothing's guaranteed. You know, the stock market goes up and down, but on average, you can get something around 10, 15%. So it's a lot better than just having your money sit in cash. So as soon as you have that minimum amount, I would say investing in the stock market is a good idea.
So how does it make you feel, though, when you hear about those people who say, oh, no, until you have 100,000, you can't start planning or thinking in the future?
It makes me frustrated. It makes me frustrated because a lot of people, you know, they don't know about the stock market, and you hear stories and you know, you think some of them hear like it's a casino, it's gambling, but done the right way, if you invest like in the entire stock market and not just one or two stocks, where yes, it's a little bit more risky because a company could go under. But if you invest like in the entire stock market, that's not as risky. Yes, there are market crashes, but as long as you hold on to your investments and you don't sell during those crashes, it'll bounce back up. For example, during COVID, when COVID happened in March, the stock market took a dip of about 20 or 30%. I was telling people just to hold on to your investments, and they held on, and it came back in like a couple of months. If you're someone like me who knows that the stock market will bounce back, you will buy when the stock market crashes. So, because I was telling people it's like a sidewalk sale, you know, like let's say you're on a sidewalk sale, clothes are down like 20 or 30%. Well, you buy and that's what I did. I put more money during the crash. And so I made more when it bounced back up on that money. So you don't have to do that though. I mean, that's my thing. But you know, just holding on to your investments, don't sell it during a crash, because people get scared. They're like, oh my God, my investments are down. They might go to zero or something. I had 50,000, let's say, in investments, or even 10,000 investments. Now I'm down to 5,000. Oh my God, I got to sell before it goes to zero. It won't go to zero, because if you invest in the entire stock market and you invest in companies like Apple, like Tesla, like Microsoft, Amazon, if these companies go to zero, that means they're bankrupt, and that means the banks are bankrupt. That means we're basically in a zombie apocalypse, and you got big, your money's not worth anything at that point. So
got other things to think about.
Exactly. So yeah, it frustrates me when I hear stuff like that, especially for people who are just trying to get into it, trying to make a little bit more money, and so that deters them. And so yeah, you have some people saying that, and you just, I guess, you got to get different opinions from different sources, look online, or talk to other people like me, I guess. I don't know. Yeah, so it's frustrating to hear that. Yeah.
And so what made you come into this business? Like what was it that attracted you?
Well, from an early age, since I was born, I was really good at math. So I like the numbers, and I also like applying math to real world situations. So that's where investments was a good fit. You're always looking at numbers, you know, and it's a real time thing. So you're always seeing numbers pass by. So that's how I really got into it. And you know, it's fun seeing your investment account grow, your retirement account grow, and everything, and seeing the fluctuations. So yeah, that's how I got into it.
And it's funny because, in the olden days, people, even I guess before we were born,
Hmm.
um, so many jobs had retirement plans, so many jobs like had pensions
Yeah.
linked, and now more and more
Hmm.
people, more and more businesses don't have that. A lot of small businesses are now opting to have everyone as a contract worker instead of having them as an employee, so that they can avoid making the contributions for them and everything. So, more than ever, I think we need to start thinking of retirement. And our parents didn't have all the expenses we have, right? Like there were no cell phones, there was no internet. Cable was what, 5 channels? Now you can get Netflix, Disney Plus, cable. I've heard Paramount Plus. Like there's so many of these things and it adds up if you start choosing all of them, right?
Right, exactly. And good point you bring up about those pension plans. You know, those great pension plans that they had when they retired, and then they're set for the rest of their life and everything. You don't have those anymore. And but for those contractors that, let's say, they get their paycheck and everything, and it's not invested in anything, they can do it themselves. There's a couple of ways that they can do it. There's an online brokerage firm that's been around since 1999 in Canada. It's called Quest Trade, so Questrade, so Quest Trade, where they can go ahead and invest their money in the stock market. Now, that's the entire Canadian stock market. So, what I would suggest, and what studies have shown, is that index investing. So, as I was saying before, investing in entire stock markets is really limits your risk, because if one company goes down, well, it's not the entire stock market. And even if the stock market goes down, it happens once every 10 years. Hold on to it, as I said before. Hold on to your investments, ride it out. And if you're investing for retirement, you typically won't sell your investments until you retire. So if you're a contractor, you've been there 20, 30, 40 years old, you retire, let's say at 60, you got 20 or 30 years. as long as you just put that money in there and you leave it there and you keep putting it in there every single paycheck, you'd be amazed at how much it grows quickly. I started this myself only investing only 6 years ago, and my retirement account is doing very well. And I'm shocked at how much it's grown. But once you start doing it every single paycheck, and you can set up contributions if you want, automatic contributions, bi-weekly, every time you get your paycheck, so that you really don't feel it as much. And it's not, I mean, it's not like you have to be very frugal either. You don't have to like strap your belt and everything like that. You just have to start doing it. And once you start doing it, you say, oh, this is interesting. Like my investments are really growing. So you want to put more and more in there. So it sort of starts being like a snowball effect. Going back to the comment of the 100,000, you need 100,000 to invest. I had a similar comment that was told to me growing up. That was, well, the stock market is for big fish and the little fish get eaten, sort of thing. And that sort of deterred me. Even though I was, I studied this, that sort of really like put me, I was like, it sort of stuck with me a bit. So the first like 7 years of my career, I didn't really invest in the stock market because I had big fish and little fish thing like sort of stuck with me. But then I was like, as I was doing my CFA, which is really hardcore in the investment analysis thing, it's sort of, well, studies show that ETF index investing really is the way to go. It beats these stock pickers. It beats these active mutual funds that charge you 2 or 3%. These ETF index funds, ETFs are exchange traded funds, and it's really low fees. It'll cost you somewhere around like 0.08% to 0.2% per year, which is really not a lot. You'll get somewhere around 10 or 20% return. Obviously, nothing's a guarantee, but on average, get around 10 or 20% return. Invest in something like the S&P 500. The S&P 500 is a US stock market. It's top 500 companies in the US. Apple, Amazon, all those companies are on there. And so as a contractor, your contractor example, if they go to Questrade, they open up an account, they can open up an RSP account, a TFSA account. I suggest to max out your RSP and your TFSA before going on to a taxable account, because that's better for retirement. You're tax sheltered, but you can open up RSP, TFSA. You can buy an ETF index fund, something that it's called VFV, so Victor Falafel Victor. It follows the S&P 500. On this year, it's up in the first 7 months, it's up already like 15%, up 25% in the past year. So that's one example. That's just the US stock market. If you want something more global, you can do VEQT. It's a mix between the US stock market, the Canadian stock market, and every other developed country in the world, and as well as a little bit in emerging markets. So that's another example of something where the return is interesting. So, and that's something they can do fairly quickly. I mean, I got a group plan myself. You mentioned a lot of people don't have the pension. I'm lucky enough to have the group plan, but even the group plan, it doesn't beat the fees of the Questrade account. So, the Questrade's one option. They can also go to the bank. The bank has you can do either a self-directed brokerage, which is the same thing as a Questrade, where you're buying your own investments. It'd be the same thing. You can buy the VFV, you can buy the VQT. If you want the total US stock market, not just the top 500 companies, you can buy VUN, that's total US stock market. Or the other option at the bank is they have funds. You can get their funds. Now their funds, even me, I was advising people, some people ask me, well, I'm at this bank, right? My checking account's at this bank. What do you suggest from this bank? So I have to go through all these funds. And even for me, it's sometimes difficult to get through the weeds and to find, so for a normal person, I can imagine it'd be even more difficult. But I would say for someone, if you're not interested in buying these funds directly, I would suggest that because it's lower fees. But you can go to the funds if you want. I would say look for equity index ETF in the bank's website for the funds, and try and find something along those lines. I like US equity. I find the US stock market in general has outperformed other markets around the world. And as far as diversification, these companies in the US operate all over the globe. So you get diversification in that way.
It's really amazing how much you can learn. And I guess in my, I'm not going to say old age, like I'm not old, but
Me neither.
I'm wiser, and I've started
Ex-
to learn that a lot of times people say something to us because they want to keep the status quo, right? So when the people who tell us, oh, you shouldn't invest, you're a small fish. And sometimes I sit there now and I wonder, like, is it because you want to be the big fish and you don't want the other small fish to become big fish, right? Like,
yeah.
it's a
Maybe it's mistakes. Maybe it's also mistakes on their end. Maybe they did a mistake. Maybe they instead of investing in the entire market, maybe they invested in one stock, and it went down, right? So maybe
I
they
mean,
have
I
their
did
own
that once at
biases.
20. It was, I
Yeah.
invested $1,000 in at the time Nortel, and it went all the
Yes.
way up to 12,000. And I was
Yeah.
like, oh, I'm gonna sell. And my friend said, oh no, they'll keep growing. And then at least I walked out
Yeah.
with 1,000. Like what I put
Yeah.
in is what I got back. But I was like, I could have had 11.
You're not the only one. I know a lot of people. Thankfully, I wasn't even investing them, but I mean, like, I know a lot of people who have done the same mistake with Nortel, Enron. Yeah.
Yeah.
So that's why you sort of want to stay away from the one company scenario, even though they look fantastic. So even Tesla, for example, I would avoid with putting all our eggs in one basket in Tesla. So, yeah.
And there's so much bad
Mhm.
advice, right? Because once I remember when I was much younger, I was watching a television show. It was one of those talk shows. And the person was saying, find companies that you like and invest in them. The problem is just because you like the
Mm.
company doesn't mean the person running the company is intelligent, right? Um,
Yeah.
did you watch
Yeah.
the Netflix show on the last Blockbuster?
No, I have not. Oh, is that the GameStop? Is that talking about GameStop or is that something else?
I forgot what the name of the Netflix show is. It's basically about the last Blockbuster store that's still open in the US.
Oh,
And
right.
how many of us think that Blockbuster closed because of Netflix?
I would think so. I mean, like,
Everybody.
people don't buy people don't have VCRs anymore, right? So it's
But they had a dual system going. So you can either rent the DVD or the video, or you
right,
can stream online, right? And they actually had a
right.
fantastic model where they wouldn't buy the videos from the like Paramount Pictures and everyone. They would
Mhm.
actually share revenue. The
Okay.
problem with the guy running it was invested too much of Blockbuster's money, and then when the stock market crashed, they couldn't stay afloat anymore.
Yeah.
It had nothing to
Yeah.
do with Netflix. So you don't know
Yeah.
how the company is being run. So I can say, oh, I want to invest in Sears because I like shopping at Sears, and then oh, Sears goes bankrupt, right? So now you've lost
Exactly.
money. um
Exactly. Yeah, that's why you want to invest in the entire stock market. But even then, like as I mentioned, when COVID hit, it went down 20 or 30%. So as long as you don't sell and you hold on, in a couple of months it was back up.
yeah.
Someone I know was speaking to a financial advisor, and this person, like, she put some of her money when it dropped, and I said, well, I think you should put, personally, I think you should put all of it. Like, I mean, it ain't going to get that much lower than this. I don't have a crystal ball, but I thought this was a good discount at this point. But the financial advisor said, no, 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 it's going to keep going down. And I told him, he doesn't know what's going to happen. Like, no one, I don't know, no one, Warren Buffett, the best investor, doesn't know what's going to happen. And speaking of Warren Buffett, going back to the S&P 500, basically my portfolio is the S&P 500. That's my investment portfolio, and it's a lot of money. And I've been very comfortable with that. Warren Buffett said when he passes away, for his wife, the instruction for his wife on his will is to put 90% of his money in the S&P 500, an index fund, like I was mentioning, like the VFE, for example, and 10% in cash. That's for his wife. So if it's good for Warren Buffett's wife, it's good enough for
Good
me.
for us, right?
Yeah, and there's another quote that he said to CNBC, Warren Buffett, where he says that invest in an S&P 500 index fund through thick and thin, and more so in thin. So
Yep.
as I was saying, thin meaning a market crash. So,
and I think
yeah.
it's also really important for people to know where they're putting their money. I have friends who, when I talk to them about retirement, they're like, oh yeah, I'm fine. I have an RRSP account with the bank.
Mm,
And so I said to
mhm,
them, like, well, don't you make more money now than you did 5 years ago? Yeah. I said,
mhm.
didn't like, have you met with somebody to see if you're still investing the right amount, if you should also be putting in a TFSA, if you should be
Yeah,
investing somewhere else? And they were
yeah,
looking at me and they're like, no, they never called me. They never told me, and
yeah.
a lot of
It's
people don't know
mhm.
also is that when you retire, if all you have is your RRSPs, they are taxed when you take the money out.
For sure, yeah, and I've heard that story many a times that the bank doesn't call you. Basically, I would have to think that it's because they have a lot of clients, and and they just don't get around to. And that again is frustrating. I know from your end because you don't have the person, you don't have the knowledge. You're expecting them to tell you, okay, like like you have more money coming in. Let's invest that. You're completely right with the RSP. You're putting in basically you're putting in tax free. You're putting in your money in the when you contribute in the RSP, you get the taxes back at the end of the year. So in April, when you file your taxes, you get that money back because you're putting before tax money in there. Basically, you're not being charged tax that year. That's a big benefit of the RSP.
Yeah.
You are being charged tax when you withdraw from the RSP, as you mentioned. The TFSA, it's the reverse. You're putting in after tax money. So the money that you get in your paycheck in your checking account, you're putting that in your TFSA. It's already been taxed. You're putting that into your TFSA. And then when you withdraw from the TFSA, everything is tax free. So if you're going to, typically if you invest for retirement, you put it away for 20, 30 years, you don't touch it, TFSA and RSP. Some people may need the money for the TFSA for renovations, for whatever. So if you are going to withdraw from TFSA or RSP for renovations, for vacation, short-term thing, I wouldn't suggest, I would suggest taking from your paycheck. But if you really have to, I would say the TFSA because it's tax free. The TFSA contribution becomes available on January 1st of the next year. So let's say you draw like $2,000 for vacation or renovations. On January 1st of the next year, that $2,000 becomes available again to you. RSP, if you withdraw it, you're taxed, right? You're taxed on it, and you lose that contribution. You can't put it back. So it's a huge deterrent to withdrawing early from the RSP.
It's funny because I grew up in a very European Italian family, right? So growing up, it was all about hard work, hard work, hard work. But I find nobody ever really taught me how to manage money. And my savings that I have now, it's because when we went into COVID, I went from working crazy hours to having nothing to do all day, right? So I started doing a lot of research on investing and saving money in TFSAs, and I managed to build it up. But it when I go and I see, the younger generation and I see the same mistake being made with them, I was like, no, I have to change this with at least my kids, I
Yeah,
opened up RESP accounts for them.
that's
Yesterday,
great.
we opened their bank accounts. They
Awesome.
get $150 of allowance per month. Plus, they make some extra cash here and there when they help with extra chores, or one now
Right,
has his first
right.
job for the past few days.
Money's a great incentive for chores. Yeah.
And so now we have a checkings account, a savings account, and we have the
Yeah,
RESP account. And we divide the
yeah.
money by three, right? Because I said if you want to
Mhm.
buy Christmas presents or a birthday presents or
Yeah,
candies, you need to have that in your checkings and savings. And then extra we put into the RESPs. And then
yeah.
when they graduate, whatever money they don't use will then go into TFSAs and stuff like that. And I said,
That's
because I
fantastic.
don't
Yeah.
want them to have the same life I did in the beginning.
Yeah, that's fantastic. If I could go back to when I was younger, starting off and everything, like I knew about RSP and TFSAs, like you, we had heard about it, but I never really knew how to open up an account. I never really knew like what to invest in, or well, I knew a bit what to, but I didn't really know the logistics of the step
Yeah.
by step. So basically, you can open up RSP, TFSA at your bank, you do that self-directed brokerage, get that VFV or that VEQT fund, or get that fund from the bank. But also the Quest trade is really ballooned, like a
I'm
lot of
looking that up
young
today.
investors. Sorry.
I'm looking that up today.
Yeah, Questrade is really, a lot of people, young investors have really got into it. Young investors have really got into other stuff too that I'm not into. So, but no, but
We won't
like
talk about that.
Bitcoin,
I know what you're
like
talking about.
Bitcoin and GameStop and that stuff, you want to stay away. That's the real gambling, right? Like if you do the Bitcoin stuff, like I don't even touch that. Like sometimes when you see the crazy ups, you're like, oh my god, did I miss something? But then usually it goes crazy down like not too long after. It's like a roller coaster. So you
My
really
my
want to stay away.
my
Yeah,
friend who invested in Bitcoin put it best. He said, I didn't put anything in there that I wasn't willing to lose.
correct. Yeah,
So
yeah,
every time he makes extra money, he takes it out.
good.
He leaves his initial. And so he just keeps taking out the extra, which, I said to him, that's fantastic because we don't know how it's going to go. We don't know yet, right?
Yeah,
Um,
yeah.
that's a whole
It's
other podcast. But,
yeah, yeah.
I really appreciate you being here today. I find not enough people take the time to talk to the I'll say non-millionaires about investing. Even my sister, who's a surgeon, she had trouble finding a financial advisor when she first started out. Everybody would tell her like, oh, you're not making a surgeon salary yet, you're just a resident, we don't really want to deal with you. And now that
Yeah,
she's a surgeon and she's also for 2 years running the hospital, everybody wants her business, right? And she said, no, you didn't want me in the beginning, I don't want you now. And it's a good lesson
yeah.
to learn for many, I think.
Same thing with me when I started off out of university. I was like, oh, let me go to the bank and they told me you need 150,000 household income. I was single and all that. So, I mean, I wasn't making that at all. So, I mean, it's just like, okay, but no, you can definitely do it on your own. The Questrade, going through the bank, online brokerage, getting some funds, index investing, ETF, equity, do global or US. Vanguard. Vanguard is the company for ETFs in Canada. So Vanguard Canada is it's really a $1 trillion industry at this point. ETFs have been around for about 20, 30 years. They're the new mutual funds, basically, but they're like mutual funds, but a lot lower fees. So it's a great place to park it. And in terms of investments, and typically you need only one, two. If you have more than three, that's too much. You just need one or two of them, VFV, let's say VQT if you want, or if you want some bonds in there. And bonds for us, for younger people that have 20 or 30 years, I would say, the return is not great on bonds. So like bonds is more for people like in retirement that like if they need the income right away, they go and draw from it. For us, if you have at least 20, 30 years, I would just stick to the stocks, to be honest. And the entire stock market, the VFV, like I said, and Vanguard's great. And yeah, so I mean, you're right. I mean, the education is there. There's a good site called Wealth Simple. It's like a Questrade. They have a lot of good articles on there in terms of investing and getting rid of some of those myths and everything about investing and helping educate people about RSPs, TFSA. So Wealth Simple is another one like Questrade. I'd say Questrade's been around longer in terms of the investing and there's more flexibility. So I would suggest more Questrade, but in terms of articles, I think Wealth Simple does a good job. Yeah.
Perfect. Thank you, Michael. I think this is
Thank you.
all incredibly important information. Listeners, please, if you have children, whether they're 5 or 10 or 15 or 30, start teaching them about money. It's super important. Retirement's going to be harder for our generation than it's been for the older generation because of all these extra things we're used to. And I really appreciate you being here today and taking the time to be with us.
My pleasure. Thank you for having me.